Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Chawdhury. The credit policy turned out to be a well-discussed and a no event for Indian markets, which saw some mean reversion after Monday's rallies. Rate sensitives, they led the rally yesterday, but today they led the decline. And more than large cap stocks, the pain point was the mid cap space, which saw serious price damage, and high beta stocks came under intense pressure. So why exactly are high beta stocks coming under intense pressure? And after today's disappointing session, what's in store for us for the rest of the day? We'll discuss that and much more for you on this edition of Markets Tomorrow with Jyoti Vardhan Jaipuri, Head of Research with Bank of America Merrill Lynch. Along with him, Prashastha Seth, Senior Fund Manager with IIFL, and Sandeep Wagle, Managing Director of Apita Technical Advisory, will also join us. Good evening to all of you. Thank you for joining us. Sandeep, you're having a marathon session. Thank you for staying back. When we started in the morning, things were looking slightly hopeful. But if I map how things have moved in the second half of trade today, another non-inspirational session.
Yes, Nikunj, you summed it absolutely right. In the first half of the day, it was, it was fantastic. The way the Bank Nifty moved up, it almost touched our target. But if you remember, we have been talking of a limited upside, and that is what was very evident in the price action. Probably the market has been disappointed by what it has been offered, and that was the reason for a late sell-off. And having said that, I really don't see the Nifty cracking down below 6,000, or even if it falls below 6,000, that will be a marginal. Buying should come in, and we will be in a sideways range of 5950, 5980 on the downside, and 6050, 6080 on the upside. So that 100-point range is where I map the Nifty till expiry, and probably for a week or two more.
Prashastha, what is your understanding? Do you think the credit policy has turned out to be a well-discussed but a no event for Indian markets? We discuss a lot about credit policy, but nothing honestly comes out from the credit policy.
I think the numbers, what the governor gave was exactly in line with what the market estimates were. So obviously it would have been factored it into the prices, and that's the reason you did not see much reaction on that. I think if it would have been something which was unexpected, like a 50 basis point cut, that would have been a big positive for the market. But as long as things play out in the manner in which market anticipates that to play, you are unlikely to see any big movement in the stocks because of that.
Prashastha, what then really spooked the markets? Because after the credit policy, the Bank Nifty, Nifty 50, Sensex and rate sensitives, they rallied. Till about 1 o'clock things were holding on. The problem only started, or the problem only surfaced up in the second half of trade.
So I think, I don't know what exactly would have triggered the fall in the second half, but 6100 seems to be something which is a big resistance for the market. And I think what has happened is once 6100 was taken out and it could not sustain 6100 and the markets came down below 6100, I think some amount of technical selling might have happened. People might have felt that even if after a rate cut market is not taking out 6100, they might have become nervous. But beyond that, I wouldn't know, what really spooked it, in the last half an hour or so.
Okay, the mid-cap space of late has been under intense pressure, and Jyoti, I would encourage you to jump in on that. Are you a bit worried about market internals? Yes, large cap space is holding out. The Sensex has not corrected in a meaningful manner, but the minute I turn my attention to the small cap index, the mid cap index, the real estate index, or talk about what's happening to individual mid cap stocks, there is a virtual bloodbath out there.
See, we've had a good rally. So ultimately, if we step back from September when the reforms started getting announced and when QE3 was announced, markets have had quite a sharp rally. So to that extent, everybody thinks maybe we'll get a pullback. We are getting closer to the budget. So typically, if we see history of markets are sold off, some time before the budget, as people want to book in a bit of profit ahead of the event. So I think, over the next 3-4 weeks, we probably have markets which move a little higher, and then we start to pause and get a bit of correction coming through.
Jyoti, but your Sensex target for this year is 21750, which means after a 25% run-up for the year gone by, you're still confident of a 7 to 8% upside?
Yeah, I think, this probably gives close to 10% from where we are today. which, our whole thing was premised on this year. We think earnings growth would be roughly 12%. We've seen last year most of the returns came through re-rating. It didn't come through earnings growth. And we think this year the re-rating may be difficult, especially as we move into the later part of the year, because the focus of investors in the last quarter of this year will move to the 2014 elections and what shape the new government would take. So to that extent, we thought that it's more like you'll probably get returns which are more or less in line with earnings growth, which is around 12% for the year. So that's where really our premise is based on.
Sandeep, the pocket which I want to discuss with you at length is the entire high beta space. How serious is today's reversal in Unitech, Carcom, IVR, SAIL or Suzlon? The ranked mid-cap, stocks are coming under pressure. It appears to me that more than institutional investors, local investors are getting nervous. Local money is taking some chips off the table.
Well, I think the move on the downside in some of the stocks, I won't say all of the stocks, has just begun. And you know how they move both on the upside and the downside. And when they fall like a pack of cards. So that is the worrying part. And I think if you talk of a IVR sale, if you talk of a IB real estate, if little bit negative news comes in, they fall the way they have fallen. And I think this is the beginning of the fall. I see the fall extend by another 2 or 3 trading sessions. So another 10-15% should be shaved off in most of these stocks.
Prashastha, what are your thoughts on Axis Bank?
I mean, we are fairly constructive on Axis. I think there's a big dichotomy between what market expects from Axis and what Axis has been delivering. In terms of market expectations, people fear that it has a huge exposure to infra and you will have a large amount of NPAs coming up. The gross NPAs of the bank are going to rise substantially. So till now, nothing of that sort has happened. The bank has been able to grow. The bank has been able to contain bad assets. So I think there's a big dichotomy with what market is pricing in the stock and what the company is actually delivering. So, my sense is either this stock will become 1800 in the next 1 year or it will go down to, 1000 rupees depending on what situation plays out. So we feel that, I think the market is much more concerned than what it should be in terms of the NPA and front for Axis. So we are fairly constructive on the stocks and believe that it could be a big outperformer over the course of the next 12 to 24 months.
Jyoti, rate sensitives, you do have a preference towards private banks, but of late my understanding is that tactically you're also bullish on PSU banks?
Yeah, so in banks, like, it's been a mixed bag. Last year it was only private sector banks which we liked. Now actually we've moved our portfolio a bit towards the public sector banks. We like public sector banks over the next 3 months, 6 months as a trade, because they'll benefit the most if NPL fears start to ease off a bit. They benefit the most from a rate cut and from a bond yield which starts to come down. So we have moved into some of the public sector banks and we continue to like those. There are some, private sector banks which are mid-caps which we have played for the last 2-3 years, because these have been, you're trying to find the next big bank in India which comes up. And there are some NBFCs which we have played. So, it's been quite a mix we have played in the whole banking space.
Sandeep, what are thoughts on State Bank of India? State Bank of India, one would argue that today led the decline. Now, of late, State Bank of India has been volatile, but if I look at the 1 month performance for SBI, it has been a reasonable performer.
Well, Nikunj, you are right. It has not been breaking 24.30, 24.40, and on the upside 25.50, 25.60 is becoming a resistance. So that 100-120 point band is what I see State Bank moving in. So till it clears that, I don't think there is any point in hazarding a guess which side it will move. But I think on the downside, if it breaks 24.40, 24.30, then yes, one can expect a move down to 23.50, 23.70, another 4 or 5%, but not before that.
DLF also corrected today. Along with DLF, most of the real estate stocks also have come under pressure. Prashastha, the watchword at least 2 weeks ago was real estate. But in last 2 weeks, real estate stocks have not gone anywhere. In fact, stocks like DB Realty or, for that matter, Anantraj Industries, Parsavnath, they have disappointed.